Hi everybody, and welcome to the weekly outlook for the week starting March 4th for the Forex market and DTS trading. Over the last few weeks, we've had some challenging trading, and even though this chart of the euro on the daily does show that it's been a pretty solid down move, that doesn't tell the whole story of how difficult it has been to trade at times. For example, this was Monday's move last week, and we had a big plummet in the pair price. We had a nice pullback and then a move away. But what it doesn't tell you is what happened on the intraday level, which is sometimes seeing it from a higher time frame makes it look deceptively easy. It did follow the breakout pullback, and then it went in the direction of the trend. But you can see Monday, Tuesday we had kind of a sideways doji. Wednesday we had what could have been seen as a reversal to test or a pullback as price went pretty much up. The next day it went right back the other direction, and followed by Friday, not much movement, but we did finally test this major area of 1.30, and that's where we are now. So this week should be pretty simple. On the EURUSD, we have come down to 1.30, and this is a massive whole number, so remember those are important. And basically what we're looking for is we're looking for either trades upwards away from 3,000, or we're looking for a solid breakout followed by a pullback, and then we want to go short after that. And that's pretty much all there is to it. We just have to be vigilant that we take good DTS signals and make sure that they correspond with the support and resistance, and that we have a good amount of volume and that there's no news in the way. Last week after our live session, I did end up taking some trades that were pretty successful. I tried to take some secondary trades afterwards. As you can see with this doji candle, I took some secondary trades, but they never went anywhere. So my second trades lost, and I ended up just a little bit ahead of break even overall for the week. So I'm hoping that this week we can get some good moves on the intraday level, and we can make some bigger pips. But like I said, for the EURUSD, pretty simple stuff. We're going to be focusing on this 1.30 area and trading around that. If we do get some bigger pullbacks, we'll be looking for 1.3130 followed by 1.3150 as our main area of support and resistance to watch. If we can get some bounces off of that, that's great. We can also be looking for a range trade. If that is what's happening, we don't know that yet, but something to watch out for is that we just watch as price bounces off 3,000 to the upside and then turns around and bounces off 3150 to the downside, and you can just make money as it bounces in between these areas. Let's check out what's going on the pound versus the dollar. Alright, here's the pound versus the US dollar on the daily chart. And as you can see, it's still in a downtrend, and it has also come up on a very critical whole number, which is 1.5. And that's a huge whole number, as it is 1.5. And there are 3 zeros, signifying the midpoint between 1 and 2. So this is a gigantic whole number and should be focused on. You can see once it broke below 1.53, the next natural place for it to stop was 1.50. It has come back and retested 1.52 a few times. Let's just go ahead and zoom in here so we can get a better look. Alright, so this is the area we're going to be focusing on. We're going to be looking for bounces off 1.50, or we're going to be looking for shorts coming down off 1.52. And if we do get a break below 1.50, I'll be looking for the old pullback, and then we'll be looking to short afterwards. So again, this is one of the situations where the euro and the pound seem to be lining up nicely together, and that's something to take note of. Remember, they are very correlated together. So if we have two major areas coming up at the same time, that gives us pretty good confidence that we can trade those areas and that we're looking in the right direction. They should make generally the same move together as well. So there is a possibility that as 1.30 gets broken to the downside on the euro, 1.50 on the pound could be broken. Or as price bounces off 1.30, it could be bouncing off 1.5, and so on and so forth. And when those things kind of harmonize and line up together, it's usually the best conditions in which I like to trade. So hopefully this week can provide us some really nice trades. That's pretty much it for the pound. Again, it's real simple. Look for shorts off of 1.52 and longs off of 1.50. Let's check out the old Aussie. And here is the Australian dollar versus the US dollar. Lately, over the last few weeks, I've avoided trading this pair. It's been kind of choppy, and we haven't been getting very big daily ranges. You can see this area right here has been kind of ugly. So I pretty much avoided it. We did get a bounce off of this all-important area of 1.0170, although it penetrated quite a bit below it first, almost down to 1.0100, before coming back in and resuming in the other direction. So for the Aussie, if you do decide you want to trade it, I'd be looking for good DTS signals on either the Falcon, the Eagle, or the Hawk, moving away from 1.0170 to the upside or to the downside, depending on which way price is going. Or we could wait till price comes back up to 1.0330 and wait for bounces to the downside there. And you know how I'm saying that price has been sideways and it's been choppy, and oh well, how would you know how to stay out of the market? Well, DTS is a pretty good indicator of that all on its own. So even if you don't do any outside technical analysis, I just want to bring up a section of the chart. Here's the Australian dollar versus the US dollar with the Falcon, and I want to highlight something, that this, if we didn't have any sort of DTS or any sort of system, we were just looking at the market, this period of time that I have highlighted is a terrible period of time to trade. But here's the interesting thing, is that DTS, if you follow the signals rigidly and go with all the information given, you would know not to take trades here. And each one of these signals fails because it doesn't line up correctly, and that would have kept you out of the market. So yes, even though we got price turning here and price turning here, and maybe it would have gone, you know, maybe you'd think price is moving. If you look at all these signals on an individual basis, you'll see that they're not good signals, and therefore you should just stay out of the market. So in a choppy period of time, you'll see things not lining up. So this is a sell signal, but we don't have confirmation down here. It's above the swing line. This is a buy signal, but we don't have confirmation down here, and it's below the swing line. Again, here, this is below the swing line, but the swing line is the wrong color. Also, the wrong color back in these two examples. And again, our confirmation down here is incorrect as well. This did end up running a little bit, but still, it's too dangerous in markets. So just by going with the signals, if you never did any outside technical analysis, you can see that the signals by themselves, the DTS gives, can keep you out of a bad situation in the market. So let's go ahead and check out the yen crosses and see what's going on with those. And here's the euro yen on the daily chart. After our very exciting move last Monday of 650 pips, we really haven't gotten much action after that. I even wrote a special update article saying after pairs make huge moves, the different types of scenarios we might be facing, either a major snapback quickly or a continuation. One thing I didn't really mention is that we could also get some sideways movement, which we've seen here. We penetrated 121.30, which was a major support and resistance, and then we came back to it and couldn't break above it but we finally did towards the end of the week last week break back above it. And that's where we're sitting right now. We're back above 121.30, so our natural inclination would be that we will go long above that number. If we get broken back to the downside, I'll be looking for shorts, DTS signal shorts away from 121.30 to the downside. I will say this right now, though, use extreme caution when trading this pair, as we have had what I would consider non-ideal trading scenario for this pair. If we see it on the Falcon, it looks a little bit differently. You can see that we've had here on the Falcon a lot of sideways action, and another way you can tell that markets are not ideal using just DTS, if you do no other technical analysis, it's just the number of signals you get within a short amount of time. Here's one, here's one, here's one, here's one, here's one. And you see, just within the span of a few hours, without price actually moving very much, you're getting arrows all over the place. And when you see arrows pop up this repeatedly in a short amount of time, you know the market is telling you to stay away. So again, another way you can use DTS to keep you out of bad markets is if you see a lot of signals, a lot of arrows in a short amount of time. You can see they just keep coming, and this is a good indication that the markets are not ideal to trade at the moment, and you should just avoid them. Because some of these are valid. Again, this is a valid signal. It's got all the right ingredients. I wouldn't take it because it's directly above a support and resistance, but then we get another signal here, followed by another signal here, another signal here. This one is valid, but considering how many consecutive signals we've seen before it in a very short amount of time, I mean, we've gotten 1, 2, 3, 4, 5, 6 signals, all within a 2-hour period, and they're going in different directions. It's probably a good idea to stay away. Remember, we're going to want to try to take trades that are easy for us to profit from, and that's the best way to make money. So patience is key, and we're going to wait for this pair to wake back up again after its giant draw. So let's check out the Aussie yen and see if there's any difference there. And here's the Australian dollar versus Japanese yen on the daily. Remember, we had our massive move to the downside, followed by a snapback. So again, we're in kind of the same boat here as we were with the euro yen. You can see there's quite a bit of similarity there in price action. What we're going to be looking for is we're going to be looking for moves away from 95, which is our all-important area, either to the upside or to the downside, depending on which way it goes. Right now, it looks like it's staying above 95, and that's going to be the level to watch. We either take longs away from 95 or we take shorts away from 95. And that's pretty much it with the Aussie yen. Again, I want to see this pair wake up a little bit more again after our massive move. I don't want us to be entering into another sideways pattern. Although if we are, you can see that you can take shorts off the top of the range and longs off the bottom. And that's why we use support and resistance. Again, you could even say 97 is a minor level of support and resistance here. So overall, longs off 95s or shorts off 95 area, unless we get some pullbacks about 200 pips up to about 97 or 97.5. Other than that, I wish everybody the very best in all their trading this week. If you need any help or you have any questions, comments, or concerns, please email me at omar@DTS Forex, F-O-R-E-X, system.com. So that's omar@DTSForexSystem.com. I look forward to seeing everybody in the live trading session, and happy trading. Bye-bye.